Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Back at it again now for some notes of updates this week. Tomorrow, we're going to have the JOLTS job opening at 10 a.m. That could move the markets. And then also on July 3rd this week, we have the unemployment report and the non-farm payrolls report coming out at 8:30 in the morning. Aside from that, we will have a shortened trading day on July 3rd, and then the markets will be closed on July 4th. Now, today, we just continued pushing higher. We gapped up and the markets were somewhat quiet for the most part. Few stocks really did move, and we'll get to those later. But then really the markets just floated up higher on the charts. Really remarkable price action that we've seen, especially coming off the big lows that we experienced in April. We continue to push higher, and I'll show you how we're about to be running out of steam in just a few moments. But first up, let's get into the market summary, and we see that here with the Dow Jones up 0.42%, NASDAQ up 0.49%, S&P 500 up 0.63%, U.S. oil retreating ever so slightly, down 0.14%, gold is up 1.03%, and Bitcoin down 0.79%. So let's jump into the S&P heat map. And we see here that a lot of the stocks are green. Google is one of those that's pulling back. Google has been struggling during this big march up. We have seen a lot of inflow of capital into Netflix. Netflix has just been pushing, hitting all new time highs nearly every other day, just about. Apple up 2.27%. AVGO, another big all-time high move at 2.4% gain today. Meta up 0.73%. Tesla retreated ever so slightly, down 1.54%, as well as Amazon. We'll take a look at that chart later also. Now into the S&P 500. Here you see the daily chart. What do we see here, folks? We see bullish consolidation, and then we see 1, 2, 3, 4, 5, 6 days moving up. Guys, if you don't know about time counts, this is your opportunity. Last week, we had our educational courses on sale. My course, Mastering the Overnight Trade, the Sleeper Hold, is on sale, and we extended it through the end of this week. A lot of folks, actually through July 4th, a lot of folks were asking, I just get paid at the beginning of the month. Can we extend this sale out? Sure, we'll be happy to do that. But this is your opportunity. Understand what time counts mean and anticipate the movements. Do yourself a favor, check out that education. So back into this daily chart on the S&P 500. As I said, 6 candles moving up. We are extended on the daily chart, now pushing above 70 on the RSI. Now, with price in this limbo area, what's going to happen with price in the near term? And I can tell you this from experience. Usually at the end of quarters, especially end of half of years and full years, there's a lot of window dressing that's going on. And what does that mean? Well, that means that a lot of institutions start buying up the hot stocks of the quarter, and they do so that they can send out their lists to all their investors, showing them that, hey, look, you had that stock during the quarter in which it made a big run. So we have a lot of high flyers receiving inflow of capital going into the end of quarter. And then in addition, what do we have coming up in the next few days? A brand new month, as well as a major holiday. So a brand new month usually implies a brand new inflow of capital into the markets, which should suggest that we should go a little bit higher on the markets. Couple that with a big major holiday where a lot of folks get together. Institutions in the markets will do what they can to elevate markets until that holiday time frame. And the reason being is folks, when they get together, they're going to talk about how great the stock market's doing. It's going to generate more buyers come next week, which could be the exit liquidity for those institutions interested in taking profit. All right. So with all that being said, we have a time count developing. We could potentially push a little bit higher, get a slightly extended time count. Major resistance on the S&P 500 is going to be up here at 6,345 points. Into the Qs. The Qs here, you see following the S&P 500, pushing higher very nicely here. Same scenarios developing here with the time count on this chart. We're now obviously in brand new all-time highs. Same with the S&P 500. Next major area of resistance for the Qs is going to be up here, 557 and 62 cents. Support area for a pullback is going to be down here at 516.53. All right, next up, we've got the SMH. The SMH we highlighted last week, this incredible bounce that occurred right here on this very sharp inclining trend line. If I scroll back out on the charts, notice what we're bumping up against, the all-time highs right here. And notice how the all-time highs also has price contained within the small little wedge that's being formed from the inclining parallel and this trend line. So that area, this area that we're basically in right now, is going to be very solid resistance on the SMH. We should see some sort of pullback or consolidation in the near to midterm on the SMH. If we do get a pullback, first area of support is going to be right in this range, right under 260. You notice how there's a pivot high here and all of the consolidation. That would be a great first area of support. Into the IWM. Now the IWM, you can see here, it did close at 215.82. It did not surpass the high pivot right here. You can see price has been trying to bubble up and break out from this recent pivot, has not yet accomplished so. We were trading above there today as well as on Friday, but still didn't get a confirming move above that pivot. We'll see what happens tomorrow, but first area resistance up here at 221, and we'll see if that inflow of capital helps push price up to that 221, support being down here under $200. Next up, Bitcoin. Bitcoin, you see here over the past 5 trading days, has really been trading right along this inclining parallel channel. You can see that with the blue dotted line strung across the screen right here. That right now is the area in the sand for Bitcoin to beat. But if you notice, there's another area of resistance just above it. Usually when price consolidates underneath the resistance area, it makes it a little bit more weak as far as that resistance. However, this is going to be a potential third hit on this chart. This area should still be solid resistance. And that area just for tomorrow is $109,048. Areas of support, first area is going to be this inclining trend line, 104, 4, and 413, followed by the bottom end of the parallel where we receive this incredible bounce right here, which is going to be roughly around $98,990. Next up, gold. Gold, we see here over the past week or so, it has been retreating on the charts. We got a very nice bounce up today on the chart, very close to this declining trend line. Almost, you could say, kiss this area of support and bounce up. If we do see more selling pressure tomorrow, the next area of support will be an actual tag of that level. And also notice how that corresponds very closely to this inclining trend line. So we're talking about a support area in between 32.35 and 32.17 on the chart of gold. Next up, silver. Now, silver has shown resiliency. Even though gold's retreated down on the chart, silver is still hanging out right here, chopping amongst previous price action. Very strong move on silver. However, what's starting to form is a very small head and shoulders pattern on the chart that could take the price of silver down here to $33.48. If it all stays above this declining trend line right here with this neckline right here strung out on the chart in a diagonal downsloping fashion, as long as price stays above there, that measured move target is still a potential opportunity up at 38.97. Any dips on silver would then be a buying opportunity for that higher move up on silver. Next up, oil. U.S. oil has seen a tremendous fall. And what do we have forming here? We've got a bear flag forming on the charts, which implies more downside to come for oil. So first area of support will be a tiny speed bump since we're consolidating right above it. That area is $63.86. The other major area of support that I'm isolating down here for a move lower on oil will be this declining trend line right down here in this fashion. You can see with the price action here, we're looking at $61.46 for that area of support. Nat gas did get plummeted again today. We had a nice move up Friday and then reversal in price action. Support area $3.38 is still valid, but if we do have any more violent selling pressure like this, watch for this price action to get pierced. The next area of support, $3.13. Again, back to consolidating above support. You have to think that that area will get pierced or broken a little bit easier than if you came from an extended distance, such as this, coming from up here and then moving all the way down into that support. That would be a great area for a bounce. You could almost say that basically already happened, even though price didn't tag that support area on the nat gas chart. Into the US dollar. Now, the US dollar continues to fall. And so far, the markets aren't being effective negatively on this fall. The next area of support on the US dollar is $94.93. And I bring this to your attention, this fall on the dollar, because what it's doing is it's showing that the euro is starting to break out. If I scroll back, now this is the weekly chart, keep in mind. We've had a declining trend line on the euro for quite some time. We broke out here in April. broke out to this trend line, came back down, retested this trend line. Guys, this is textbook technical analysis. Whenever you have a breakout of a trend line, don't chase it. Wait for some sort of retrace because it normally happens. And not 100%, nothing's 100% in trading, but this sort of pattern usually happens to a retrace of the scene of the crime right here to this trend line. And then you see it continue to move higher on the euro US dollar chart. So we see prices going straight through here, busted through this resistance area and continues to push. The thing is, now we're starting to run into resistance on the euro US dollar chart. You can see this pivots right here, this M formation. This all will be resistance and tough for the euro to get through, which makes me think too, the dollar will likely catch a little bit of support sooner rather than later and retest this trend line that it most recently broke. And that's all very near-term trading, but you can see what's happening on the longer term. The euro is starting to gain traction and gain value against the dollar. Next up, we've got Robinhood. Now, Robinhood had an explosive move today. You can see here up 12.77%. And this is on the back of news that Robinhood rolled out to European Union customers that they'll be able to start trading stocks basically through derivatives on their website and through their platform. This opens up the door to a boatload of brand new customers that were eager to get into the Wall Street action here in the New York Stock Exchange. So this is great news for Robinhood, but will it last? So if we look into the chart here, I've got several trend lines that I'm highlighting here on the daily chart. If I go back further on the chart, you can see all the way back, we're at all brand new all-time highs. This pivot area was the exhaustion move after the IPO, and now price has finally gotten back above this pivot high from an original opening of this stock on the New York Stock Exchange. Now you see here with these trend lines that I've created several here that we've already beaten. You can see those strung out here, which is where price stalled before making this huge run. And now the next areas of resistance, and really there's not much beyond this, folks, because now we're getting into uncharted territory. So we're starting to get to the very, very high end of the chart that is at least having technical analysis influence potential price movements. So we see here on the chart today on Robinhood, we broke above this trend line. Now with this momentum, we could still continue moving higher. Notice here on the RSI, we're well above 70. And then we flip over to the weekly. Notice this move. This is the fascinating part. This is even more extended with negative divergence occurring right here on the RSI. Look at this move from the April lows. Robinhood is trading over 200%. I'll say that again, over 200% gain on this stock. Simply incredible in this short amount of time. Price action likely needs to come back down. These trend lines are going to serve as the first areas of support. Price action at $78.64, as well as $75.71, followed by a major support area at $66.44. Not to say that these new developments aren't good with Robinhood. It's just gone too far too fast, and this chart needs to cool off, have a little bit of relaxation, come back in a little bit before it continues moving higher on the charts. Very impressive move here on Robinhood. Next up, we've got CAVA. CAVA here, as you can see on the daily chart, we did break out of a shorter term resistance trend line. You see here strung from this pivot here in February of this year, strung down to the next collection of major pivots, and then price action today just broke through. Now, this is a great breakout so far for CAVA, and if I scroll back further on the chart, you can see how I derived this support zone, the $71.50 through $72.10. That all came from a major pivot that occurred on March 24th, strung out horizontally. It kissed this down candle this one day, but then provided support here as well as here on the charts, and the price has continued to move up. Since this area was tagged, this has now been 6 trading days. So we're starting to get to a point of an exhausted move. We likely will maybe retrace, which could be a good buy-in opportunity for the next move up into this other declining trend line, roughly at resistance at $94.17. But with this more momentum move, this could very well break out and then test the $109.13 area. Great turnaround here on the chart for CAVA. Next up, we got MSTR. MSTR also is breaking out. Now, this breakout also does have a 6-day move associated with it, but this breakout is much smaller in the scope of breaking out above this declining trend line. So watch for a confirmation move tomorrow. If we get a confirming move with a close above today's high, all this trend line area will all be buying opportunities for a next move up to 476.43. Watch for the confirmation signal tomorrow. If we don't get it, the play is not valid. So very important to know and also pay attention to tomorrow's price action. Next up, we got AVGO. Now, AVGO, much like Robinhood's chart, just basically straight up, right? Straight up into this inclining wedge pattern that you see here on the chart. But if you flip over to the RSI, we've got some divergence going on. You flip over to the weekly also, we're starting to press into 70, which is overbought territory. So AVGO, much like a lot of stocks here that I'm seeing on the charts, really need to cool off and come back in. But that likely won't happen until we get through the July 4th holiday. So that's why I said what I did at the beginning, give you guys a heads up. We still could have a little bit more upward momentum on these charts before we start having your typical technical correction. Next up, BJ's. BJ saw some selling pressure today, down 5.62%. And next area of support is going to be derived from this inclining trend line. Notice all this chop action right here. This chop action has told us that price was going to go lower, mainly because of this one single candle right here. This is a topping tail right tucked in the middle of all this price action, implying that price was going to have a difficult time getting above, much like what we've seen on the gold chart. We've got this topping tail continually holding price down, where gold, with all the geopolitical conflicts, gold would likely have been ripping much higher. And then it didn't, though, because of this technical signal on the charts. So back into BJ's, as I mentioned, this inclining trend line is going to be the first area of support at $104. Next up, we've got HPE, Hewlett Packard. Now, Hewlett also had an awesome move today, up 11%. Now, this was back on some news from a settlement in court, so that that court proceeding is over with, bearing that we do have the approval from the judges. However, investors rejoiced and pushed the price higher. This bull flag consolidation created a measured move up here to $20.79. That's already been accomplished. See if we get a confirming move tomorrow. If we do, support areas are at $19.81, followed by $18.84, both of which would be great buying areas, granted we get a confirming move tomorrow. And we could be moving up to that next resistance, $21.94, if we get that confirming move. So keep your head noticed for that. All right, next up, we've got Amazon. Amazon here did push higher on Friday, but it got rejected today. And notice why. We've got an inclining trend line right here on the charts that was showing that this area will be resistance on the charts. Plus, notice also we were moving up and we created a bull flag pattern right here with this move up and this beautiful price action coming down at a diagonal pattern. This bull flag pattern has a measured move up here to 228.31. So this move up and sell off today may not be over with yet. So I've got two factors. One being this bull flag measured move has not yet been tagged. And then second, look at this mammoth volume candle here that occurred on Friday. That was all pressure, buying pressure, putting price above these previous pivots, but it had a huge amount of volume. Notice the next comparable candles are in the bottom right here that we saw on Amazon before it made its tremendous move higher from the April lows. So this volume candle sticks out to me for a couple reasons. One being that was a very strong move for Amazon. But then today's reversal in price action with limited volume shows me that there's still a lot of sellers here. So we've got conflicting signals on this chart of Amazon. We have one candle showing us we should be moving up to that measured move with the bull flag pattern. However, we've got this candle with less volume showing that this area is rejected. So right now, Amazon is kind of in a no man's land territory for me, not eager to short, not eager to buy, waiting for price to get extended a little bit further before we can have a high probability trading setup. But be watching for 228.31 to be tagged. And likely at that point, we should start seeing some selling pressure enter on Amazon. All right, folks, that is everything. Wraps up today's Trading the Close. Thank you guys so much for tuning in. I look forward to bringing you guys some more data tomorrow. Again, stock markets are going to be closed on July 4th. We will be having Trading the Close on July 3rd. Aside from that, you guys have a fantastic rest of the day, and I'll see you tomorrow.